Bitcoin doing some wild ass stuff on the release of CPI data. It did a quick juke to the upside. Here, let's do this. Let me go down to the 5-minute chart. So even though the initial move was down, the whales and their algos made sure that people in shorts here at the right before 8:30 that they got booted out, and then it went down, and then it swung the other way. So on my channel since Monday, I've been trying to prepare, and I think I did effectively prepare both YouTube for free content, my YouTube tiers with the updates, and recorded videos from Discord, and then Discord with the whole community being on the live calls as they join and the updates that they get. Been preparing everyone for bi-directional volatility. So both directions within a specific range. My guess was 9 or 10%. And in the end, it was 7.8% right behind me. Bi-directional volatility. So from top to bottom, 7.5%. And the lines that you see behind me, I've been talking about since Monday as well. And it has interacted with them extremely, extremely well. However, the odd thing about this, even though Bitcoin price followed plans almost as expected, besides this little juke right here, or this one, the head fake up before it went down, that usually doesn't happen. But even though Bitcoin went as expected, it still looks like a circus, and to me, it's still surprising as hell. Now, the big question is, because the economic data released was pretty damn negative, and it essentially guarantees Jerome Powell will continue with his 75-point basis rate hike, which is bearish for the stock market. Will Bitcoin so stock market and Bitcoin will follow, but will they get a rally first to just destroy shorts, and then the same people who are shorting try shorting again, then it goes even higher? I mean, we could actually get a green October because of all the flooding of shorts that are coming in from the small money, and then the big money can see all that liquidity up there, and it's possible that a short squeeze is going to be initiated. I just got off of a VIP call letting them know I think either Bitcoin's going to get rejected and the stock market will get rejected from this point, or do one more FU candle, FU move just a couple percentage points higher and a failure pattern above the daily 21, and then come down to make new lower lows. That was my main guess. But my VIPs kind of rebutted me the entire hour right before jumping on here, gave me really provided very solid evidence that Bitcoin could go significantly higher off these lows. I'm not going to share all that information with you because that's going to be more exclusive to Discord. And for Discord and the Cryptillion YouTube tier, I've already shared the recording of that video, so you can go check that out. But for everybody else, I will give you the skinny on being prepared for a large rally up, even though macro bearish is still happening, right? And I'm going to give you the exact threshold to look for when you can flip sides and say, shit, this is the tipping point where it becomes probable that a rally is going to happen. And I'll tell you what, when I give you that threshold, it's so easy. And I don't think there's anybody else out there that's going to tell you this tipping point, and it's so simple. So let's go get some damn Bitcoin. Now, in my previous videos, I believe I only pulled out this horizontal when I mentioned it would be a 5% up and 5% down. So at that point, I was guessing that this area here was the middle point. And actually, it roughly is. And I only had a moment in my previous videos where this last part showed up, but I drew down 5% down, even below 18.2, right? So expect this area. And then the rest of the videos, you didn't see this in play because I like to zoom in a little bit more. But and then, so you can see from the middle point, just remember this, when there is particularly the ones that get the biggest moves are CPI / core CPI. It usually comes at the same time, same day, same exact moment, and FOMC, right? So make sure you're paying attention to that, because If you're trying to actively click around with your money and trade Bitcoin, whether it's spot or futures, you have to pay attention to that. Because obviously, looking behind me or looking here, you can tell why. And so from this middle point, we got what percentage down? 4% instead of the, I guess, maximum tolerated for a move is 5, right? So whales don't move Bitcoin more than 5% in one direction on CPI or FOMC. And so this middle point going up, it's only 3. So technically, it has room, if it's going to be symmetric, to go another percentage point up from where it has already gone. So let's measure that out. And that would be the FU move that I was talking about. So an FU pattern, just one more spike above to get the last shorters out before bringing it down. That is my idea number 1. All right. And I've gone over on my channel a lot how in a bear market, you have 2 major bear market rally targets. So in a bear market, if price of the stock market, it works for the same. SPX, all that stuff, and Bitcoin, it's the same line. Your 2 main targets for a rally in a bear market are the daily 21 for your smaller rallies, right? And your daily 89 for the big ass rallies. So returning viewers, you were familiar with this. And returning viewers also know. So new viewers, if you're hearing this for the first time, just realize if you start watching my channel a lot, you're gonna be drilled, and you will know how to handle this price and how to do your own TA pretty damn well. But and on top of that, so this is the daily 21, the L line, which it's touching right now, bear market rally, right? Even though this is bear market whale games, there are 2 primary ways that price interacts with the target, either the daily 21 or the daily 89. Either a rejection, which technically right now, this is a perfect rejection, or a failure pattern, which can go 1 to 3% above the target, and then when it comes back to touch it, it falls through, which is why it's called a failure pattern, right? So for new viewers, since I'm going to train you hard, if you're coming back to my channel here, make sure you subscribe and hit the bell for all alerts so you can stay in tune with all my altcoin updates as well. And then returning viewers, this is the time on the stream to go ahead and hit the like button and leave me a quick emoji comment. If my clone scammer, who has Cosasverdes in his name, the same thing, I just can't get rid of him. So he's a real person too. I've already confirmed that. But I'll delete his comments. Just watch out for that if you leave me the comment. I'm pretty good about deleting my clone scammer. And so let's dive into what that threshold is when we can instantly flip the probabilities of crap, this is going to rally, as opposed to Cosasverdes or Tim's main guess that it's either going to get rejected or a failure pattern on the yellow line or daily 21 and then make new lows. That's my main idea, but I'm getting ready to show you almost very likely exactly what you'll see if that's wrong. I want to prepare you for the opposite first, because really, it really could go either way here. All right, so let's dive into that. Make sure you follow me on Twitter, new viewers, Cosasverdes with the number 2 afterward. And then the Discord links and visual instructions are in the description section of my non-streamed videos. And then on my non-streamed videos, there is a join button right next to the subscribe button. If you click the join button, it won't take your money right away, but rather a 90-second video will pop up with pirates and skeletons telling you what the YouTube tiers are about. All right. Very simply put, the threshold for, I guess, a probability flip on either go up or go down is right here, the daily 21. But for new viewers, I need to spell out how price will move on this line. So even though this is a daily EMA, I'm on the 5-minute candles, right? And I have a ton of people in my Discord who don't have access to this MTF EMA, the same one, and I need to do a video on different ways to pull this up on 5-minute or 1 minute or whatever, because it's extremely important what I'm about ready to show you, new viewers. For returning viewers, just bear with me. You've been drilled on this a million times, but the importance of this is when there are fake outs. One primary, among the few primary ways that fake outs happen, is candle closures above a threshold, which would then invite buyers to buy more after that candle closures, right? And so if you get a daily candle closure or an hourly candle closure above here, it often is to lure you the wrong way. But what I'm about to show you using what's called an MTF EMA indicator, which all that means is I can look at a daily EMA on a 1 minute chart, or a daily EMA on the hourly, or daily EMA on the 5 minute, whatever. That's all MTF means. And so that's where this comes into play, because what is a better signaler than the daily closures, which are often fake outs, is what I'm about to show you. So this is very important, new viewers. Like, you need to remember what I'm going to show you. It'll be extremely valuable. And if price does go up, there's a damn good chance what I'm about to show you is exactly what happens. And my returning viewers already know, like, that happens quite a bit. All right. When price gets above here, so I'm not guessing the exact moment it gets above. I mean, hell, price could come check one more time, then go above it. So how it gets here is irrelevant. But what you'll see once price gets above here, it often makes it'll often make a jab through. It's kind of like this is a like you got to poke a balloon, right? But it's stronger than a balloon. Let's say, what is it? I don't know, like in Taekwondo or karate, you got to break the board, right? Like, you know, those competitions, so this is an obstacle, and price has to push through. It usually just doesn't go, you can't break a board by going, like the board won't break. And price kind of reacts the same. So when an obstacle, which this is clearly the obstacle right now, right? When an obstacle is broken, it usually jabs through, which we might actually see this happen right now. It usually jabs through and establishes a first high on the low time frames above the obstacle. And then it'll come back down. Sometimes it'll go a little bit below, but usually it'll stick its landing, or if it does a couple candles below, it'll come right back above, then use it as support. And at this moment, what you're seeing right here, after it goes above, makes its jab high, so its first high, comes back down, and then finds support on that. At this moment you're seeing, because you will see this on the chart, it's roughly a 50-50 still. It might actually be a slight edge towards the upside, which would then initiate a large rally up, perhaps to 21K or higher. But at this point, it's kind of a 50-50. And the moment that you can totally flip probabilities, like, man, it is probable that this won't be a failure pattern above here, and it's probable it's going to the next target, which is exactly 20K, which is the September candle open, the next target up. So at this moment that you're seeing is 50-50, but it's when it takes out that first jab high. So let's just label it at jab high. It's at this moment right here. At that exact moment, right? That moment, that's when the probabilities flip. And the information for, new viewers or returning viewers who haven't seen me talk about this, this is information you need to retain, all right? Because it's going to help you drastically for any asset, whether you like XRP better than Bitcoin, the price of oil, the price of the dollar, it doesn't matter. It's all, even the price of black market testicles and all that stuff, it moves the same. Sometimes you get a little variation, right? So another couple ways it could do is it does a jab, it does some support, and then it goes higher, and then finds support again, and then it comes, then it either break. Actually, if you see this happen, it could still go either way. It's not probable until it takes it out. So sometimes you do get that jab move up, and then it comes back down, but still, it often finds support. So if you see something like this, like the jab is taken out, but it still comes back down, what you're looking for at that point is, when it touches this, does it use this specifically as support, or are the candles coming below it like this, and then it works its way above? And if that happens, if it finds support just below, at that moment, in this structure, like a 1-2 jab, if this happens, then it's statistically more probable that the next move up is a lower high to this and then it breaks down. But if you get this double jab deal where the first taking out of this of the first jab high, so it took it out here, right? If it comes back down, but it can stick its landing like exactly on the 1 minute candles, 5 minute candles, like it doesn't close a candle below. If you see that happen, then it's still probable it breaks out. But it's all about how it lands back down on this, I'm telling you. However, that rule that I'm talking to, so the reason I'm going like in depth on this small chart stuff is because this is the pivot point. Like this exact like 1 minute candles at this line are essentially going to quote unquote dictate the price of Bitcoin for the next 2 weeks. So even though I'm on this micro time frame, a lot of you might just say, oh, give me the direction for the next couple weeks. I am. And I'm telling you how to see that. And I'm showing you exactly how it'll move under 3 different circumstances. Like it will move in one of those ways I just showed you. With it, like it's I guess there's a small chance it won't. I guess there's a small chance it'll just bust through and, go to the heavens, right? But there's a very high chance that one of those 3 ways is exactly how it'll move if we do get a break up. So that is your threshold and exactly what to look for and how to look for it. When to say, damn, this is not going to be a failure pattern. We're not going to get new lows soon. And I need to start considering or just do it to flip long. I either just need to flip long now or strongly consider flipping long, which means stop trying short. Because the next, where will Bitcoin go if you see all that happen and it does take off? Well, the next, let me go to the 1 hour chart. All right, so now we're not on the 1 minute and 5 minute candles. All right, so the next thing in play, I'm going to go to the 15 minute. The next thing in play is 20K, not just because it's psychological number or the previous market cycle top, which are add-ons to this, but it's the September candle open. The September candle probably opened there because of those previous things I just mentioned, right? But still, it's a lot of things. So it'll pretty much just go straight here. Are there obstacles? I don't think the weekly 10 is there yet. Yeah, there's nothing stopping it. So if you see price do this and it does the jab high support, takes out the jab high, it will go straight here or higher, or it'll either go straight to 20K without much of a pullback, right? And when I say straight there, I don't mean in 1 minute candle or 1 hour candle. I just mean it's not going to have a strong correction or it's not going to make a strong low, higher low before it gets there. It's just it's gonna either float up there or race up there, right? Without a strong, so it's not gonna go like this probably. It won't. So you get the jab high support on the yellow line. It's not gonna go like this. Boom, boom. It won't do that. It will like very, very likely go straight to 20K. Does that make sense? And it could go even higher. It could go to the weekly 10 and potentially do a failure pattern above the weekly 10 up to 20,600, like straight up there to take out all the mounting shorts. Because people right now are the open interest, which means the amount of people gambling, right? Or just using futures on stock market particularly on Bitcoin. On Bitcoin, it's at all-time highs. It's never been higher, not even at the 64K top, the 69K top. It's the highest ever now. And so shorts are mounting up because of the CPI data release, right? And sometimes when that happens all at once, the big money that can essentially control where price goes on Bitcoin, because there aren't many players in Bitcoin right now moving price. Like 90% of trading volume are hedge fund bots essentially. And bots that will trade better than you and they will beat you over time. And so it will go straight there. But people who have been stopped out or liquidated out of the shorts once, twice, 3 times, they're going to try it a 3rd time at the weekly 10. That's why I'm saying if it comes up here, it could easily go straight to 20,600 to take those people who are shorting for a 2nd and 3rd time or 3rd time at the weekly 10, because that's a common place for a perfect rejection to happen. If you look back in Bitcoin history, there are so many moments, especially in downtrends, bear markets, where price goes like exactly to it and just tanks, like a great play. But because of the CPI data release, if price gets up there, I would be weary of that. I would expect price to go above it, to take out a high leveraged, to liquidate high leverage plays, and then to stop out responsible people who are using lower leverage with bigger capital. But either way, that creates liquidity, which for new viewers, all that means is, the reason why they do that is because, let's say you have $100 million, right? And you want to short $100 million worth of futures contracts somewhere over here. Before then, you take $50 million of Bitcoin that you have on an exchange, on multiple exchanges, and then you sell all of it at once. So you're essentially guaranteed a win on your futures with leverage, right? Even if you're taking a loss on that Bitcoin on spot, which means no leverage, doesn't matter. You made so much money, like essentially guaranteeing a profitable trade. But if you have $100 million, you have to have $100 million across multiple exchanges that you're doing this. You have to have $100 million of shorts, right? So, and that's why these plays happen, because they have to get all the 100, whatever amount they want. They have to go up high enough and to attract more and more people shorting to meet that goal of, I want 100 million shorts, because they have to. It's like attracting bugs or attracting bees or attracting mosquitoes. They need to attract them in order to get as big of a position as they want. They have to attract the opposite side. Does that make sense? All right. And then the big players, they have a bunch of the asset on spot, whether it's a stock like Amazon or whatever. This is just what happens across the board. And then they'll sell it on spot after they meet their quota on filling those futures. Now, have I seen that? Like, have I talked to people who have done that? No, it's just, this is my well-educated guess. All right. I haven't been on the inside of traditional markets to know, like, that's precisely what they're doing, but, human incentive, it's just what's happening. All right, here we go. So watch out for that. So this move from the daily 21, even though I think it could go beyond 21K and above, but the very first move before any type of daily red candle pullback, or even 2-day red candle pullback before going up, it'll very likely go straight to 20K, but it could go to 20,600 because of all the reasons I said. So I'm not just showing you how price will move on this and when exactly that you might want to flip short-term time frame bullish, right? So I've done those already, but I'm describing, why, like the reasons why this stuff happens, right? So you remember it for the future. So again, if you're just jumping on here and you haven't hit the thumbs up button, go ahead and do that. And also, if you're just jumping on here on the stream, go ahead and hit subscribe and the bell for all alerts, because I am trying to do as thorough of a job as possible, helping you all remember not just what is going to happen and how it'll happen, but why. So the what, the how, and the whys. All right, now, so this is a different chart. So this is still Bitcoin, but on a different exchange. I pulled up a different Bitcoin chart without all the lines. All we have is so we just have the same two EMAs, the daily 21 and the weekly 10. So I've already described price on this. It just looks a little different without all my guides, right? I don't have the September open at 20K, all that. But here is where this move, and honestly, it could go even higher than that, folks. And by the end of this portion, I got to wrap up here because it's already 6:30. But I actually don't want to give you all the reasons why. But if the weekly 10, the same thing happens that I showed you on the weekly 21 or the daily 21 down here. If you see something similar happen where it gets above it, uses that support, then takes off, it goes over the jab high. 21, actually, by the time it gets there, it'll be a little higher. So this is an origin line. This is the most macro thing that you can have in price. Like, there is nothing more macro than an origin line, because it goes back to all the way to the beginning of price. The rally could easily go here. Easily. And kind of looking at the structure here, it meets this. Let's see, how many days has this consolidation been happening? So we're in $122 day consolidation. So does it make sense within this consolidation move if that were to happen? So just zooming out a little bit. So now let's take these guys off now that we know what we're looking at. Okay, with this origin line as an addition here. Does this make sense with this 122-day shape? So let's go ahead and take a projector tool. It's like a failure pattern above. And honestly, like I was talking about, so you see this, actually, let's do it more like this. And let's extend this. So see this trend line here? You know how a lot of pattern traders, they'll take on positions, either a short or a long. So pattern traders would long this if price can get above and then break out of it. So there are a couple ways to play. You could play the retest or the breakout of it, or the breakout, put your stops in, get stopped out in small profit, then re-enter on a support. There are a lot of ways to play this. But a lot of people, they'll take on shorts first, right? And they're ready to flip if it goes above, use it as support and breaks out. You could literally try playing it short first and long second. So pattern, people looking at trend lines and patterns, like they'll probably make it a triangle or come up with some fancy name, like a broadening wedge or some type of wedge. Like they'll make up some name. But so remember when I was talking about inviting flies, and you need to invite the opposite way in order to get a nice trap, right? Before dumping it the other way. Well, if it breaks out of here, you're going to invite a lot of people longing, right? Even though a lot of those people longing would be taking profits within 6%, but many swing traders do not. They'll just keep it, like people keep adding on longs and longs, or some people shorting will just stubbornly short over and over and over. So people who are shorting over and over and over will say, hey, I want to short here, right? And then maybe they don't have the $100 million they want. So now we got to say, man, like there aren't enough orders here. Like, how do we invite more? We'll go higher, invite even more people to short. So it could get into this effect here. Does that make sense? So this line is another way to invite the opposite positions. If you break above it, right, and then you start hitting other resistances, it'll invite more and more people to short. All right. So they could take on more positions. So it makes sense in a lot of context right here. What else do we got? And then historically, so I'm not going to go over all the rebuttals that my VIPs gave me for why this is actually a pretty strong case that this could happen. But so I'm not going to go over all that because I got to end this Bitcoin portion. But if you were to look back in history of all the times that Bitcoin price went, see this origin line here? That Bitcoin price went below an origin line and did a failure pattern. Actually, just like this, it went below, did a failure pattern, then came back below, right? It didn't continue a trend. It happens a lot. So but usually you do not have permission to go above an origin line that you just went below unless you go touch the next one down, right? But with baked into that rule, that's only been broken once ever during Bitcoin price history, or during Bitcoin's history, which was during Wyckoff, which was fabricated price anyway. A good time to break a rule, I guess. But the rule, there are no macro rules broken with this, because even though this next origin line down here has not been hit, that's fine. You can still do a failure pattern above and then come down and touch it before then you establish a weekly uptrend. Does that make sense? So that's another, I guess, piece of evidence why, from a large scale of things, why a rally up not only kind of fits into the scheme of things, but it doesn't break any rules, and it's not even weird. Like, even with, I'm the only one on YouTube who uses origin lines that I've ever met, because I essentially I made them up independently. Right, I'm not going to say I invented it, but but I'm the only one who uses them, and so my rules, they're not commonly known, but even within my own rules, it makes sense within the context of that. Does that make sense? So so just be prepared that if you're bearish, particularly because the CPI data release came out and it's very negative, it essentially guarantees Jerome Powell will keep increasing rates and putting pressure down on the stock market over time. Within the context of, yes, everything is probably going to go down strong, within that context, that you need to know that is your large time frames. So you can go up, Bitcoin can go up to a failure pattern above this, up to 22 to 23K, and still you're within being in the context of you're going to get a large move down on the large time frames. There's a lot of wiggle room north to still be in the context of this shit is all going to go down hard. But you could easily go up all the way to 22, 23K first. And the stock market could easily rally a proportionate distance as well. I think we measured out, I think it was like 7 to 8% rally is what we'd be looking at. And that would take Bitcoin up like 15 to 18%, and hopefully it's 18. Yeah, that's 18%. Yep. So stock market, if this were to happen, if you follow stocks and SPX and all that stuff, you would be looking for a move that's about 7 to 8% up, and on Bitcoin it'd be up to 18. So between 14 origin line is about 12. So between 12 and 18% rally on Bitcoin, and I really hope this was helpful because it's really easy to not just get your ass kicked trading the wrong direction because there's good reason to, right? CPI data, everything's going down, right? And you try shorting, get your butt kicked. Okay, well, it's going to go down this time. You try it again, get your butt kicked. And then you're angry. And then the next move up, you short even harder, and you get your ass kicked 3 times in a row. You can lose so much money getting trapped in that mentality because you weren't able to, you didn't watch a channel like mine to prepare you for it, the move that I don't think is going to happen, but it is kind of 50-50 at this point. But if you're not prepared for that shit, you can get trapped in the psychological, I guess, drama or stubbornness of just trying it over and over and over, and just, you can destroy your account. And I hope if I save, one person from destroying their account, because there's damn good reason to be short. If I help just one person with this video, I will be happy. And again, feel free, if in the end you do feel that I helped you in a way, just leave a comment on a future video or this video and let me know how I've been helpful to you. So let's move on.